I'm Carly Bond, President of Tennessee Mortgage Bankers, and I just want to thank everybody for joining us today. And thank you to our guests for joining us. They have full-time jobs, and as you can imagine, they're super busy right now. So we appreciate them for taking time out of their day to spend time with us. First, I would like to introduce those guests to you. First is William Cooper. And William is the Vice President of State Government Affairs and Industry Relations at the Mortgage Bankers Association. And in that capacity, he leads MBA's advocacy efforts at the state and local level, as well as MBA's engagement with mortgage banking associations across the country. So thank you, William, for being here. We really appreciate you. Next is Dan Grattan. And Dan is the Associate Vice President of Legislative Affairs for the Mortgage Bankers Association. And in this capacity, he serves as one of MBA's lobbyists on Capitol Hill, mainly focusing on the Republican members of the United States House of Representatives. So thank you, Dan. We appreciate you. And last but certainly not least is Alden Knowlton. And Alden currently serves as the Associate Vice President of Political Affairs for the Mortgage Bankers Association, where she oversees the PAC and grassroots advocacy programs of the association. And she also oversees the grassroots activities of the 27,000 member network, including industry calls to action and the management of the annual National Advocacy Conference in Washington, D.C. And also, she is a graduate of Sewanee, which is the University of the South here in Tennessee, where she played basketball. So thank you, Alden. We appreciate all of y'all for being here today and sharing some important information with us. And I have asked each of them to share an interesting fact with us that would not have been on their bio. But I will take this time and turn it over to Alden. Let's get started.
Thank you. Thank you so much. And thank all of you for taking time out of your days to participate and kind of hear an update. I know you all are busy doing your actual day jobs and are probably feeling some of the pressures just serving your customers and communities during this time. I wanted to start by reviewing and just drawing to your attention this resource page that we've got through MBA.org. If you go to MBA.org/coronavirus or MBA.org/coronavirus resources, it'll drive you to really just a complete kind of one-stop shop of everything that MBA is tracking at the state and local level, but also at the federal level, whether that's Congress, the administration, or the various agencies that are putting out notices almost constantly. So information and updated policy changes from the GSEs, or information and policy changes from CFPB or FHFA. So all that's right there. And if you have those slides available for download, it also includes a link there that you can use to get to that page. And it also includes a link to a weekly webinar series that our senior staff is currently running at Mondays at 2 p.m. Eastern. There is a limit for the conference room or the little platform that they use of 1,000 people, but we encourage folks to register for that because anybody who registers automatically gets an email of the recording right after it's over. But that's being led by our chief economist, who's giving a market update, and then a lot of our senior staff leaders who oversee all of our policy development and execution, our legislative execution, and a lot of updates from our CEO, Bob Brooks-Smith. So really good content, and wanted to just flag that for folks before I turn it over. And so you'll see the agenda on your screen. We don't really have corresponding slides for too much of this, just wanted to keep this top of mind for folks. And I am now going to turn it over to Dan Grattan to talk through the first two agenda items. Dan?
Thanks, Alden. I appreciate the pass off, and I don't know an interesting fact about myself other than to say I have not shaved in 3 weeks, and I still can't grow a beard. So I'm looking at everybody's beards on these calls. I was just on one with a bunch of lobbyists and a couple members from the House of Representatives, and people have unbelievable beards. And somebody said to me, "Dan, wow, good for you. You're keeping up shaving." And I said, "No, I haven't. I just look like I'm 12." So that's that. I really do appreciate you guys having me on the call. I just had a call with Jeff McAvoy a little bit ago. He said he wasn't going to be able to make it on, but I was just great to hear his voice, and I look forward to seeing many of you who I've met before again soon, whenever this ends. I don't have any insight on that, by the way, but I will tell you that let's start with what's happening in DC and what has happened. The legislation continues. It is all iterative, and we're past now 4 pieces of legislation that are focused strictly on combating COVID-19 and all the economic challenges that have come with it. And then there's a lot of things that'll fall out of it at some point later. Last Friday, President Trump signed kind of the follow-up CARES 3.5 or the Phase 3.5 Act, which is kind of the update to the CARES Act, which was the multi-trillion-dollar bill that was passed 3 weeks ago. So the reason I mentioned this bill is the Paycheck Protection Program was really the driver for it, which is being administered by the Small Business Administration. And so that was about a $250 billion in additional funding for PPP. There was $75 billion for hospital spending, $25 billion for other testing. This is the step that's going to be kind of telling for what happens next, I think. There was very little input from other members of Congress who are not named Pelosi and Schumer and McConnell and McCarthy. And then the other key players in this one were Treasury Secretary Mnuchin and the Chief of Staff at the White House for the day, Mark Meadows. There'll be more chiefs of staff later. We're on our 5th one now. The question now with Congress is out for the next out this week. The question is, when do they come back and what do they do when they get in town? The Senate reiterated that they are coming back next week. The House had a ridiculous flip-flop where they said they're coming back next week, but then they said they were going to come back next week, and then they said they're not. So we're looking to what the House leadership is going to say regarding the attending physician of the House, which is also the same for the Senate, by the way, regarding when Congress should be coming back. The word right now is that the physician says that they should wait until there's 14 days of declining cases in D.C., but this assessment, I wouldn't say, precludes the House from reconvening at all, especially because they're talking about doing it in kind of a modern fashion with either video conferencing within the rooms as long as they're in town, or there's all these different things that are being discussed. Everybody who's on conference calls now know that we can convene in different ways, but the House and the Senate are dragging their feet on technology a little bit. So what is going to get worked on? It will be mostly COVID related again when they come back. But again, there was a very simple bill that was passed last time by a very small group of congressmen. The general math in DC is the more people and the more issues that are involved, the longer and harder it's going to be. So let's talk about a couple of the possibilities. There was a flurry of activity going into the Speaker's office last week for getting committee chairs to submit priorities and proposals, but that has significantly died down with the discussion that the House will not be in session next week. We have not seen much in the way of comprehensive language. We've seen a couple bills sent to MBA, or not a couple, but dozens of bills sent to MBA that could be included and are in very rough form at this point. But the big question is kind of on when they do come back. So we're looking at a lot of the whispers and trying to decide what we think is real. My guess is that they do come back sometime the week of May 11th. There is talk that they will come for one day only. They will be voting in. It'll basically take the full day to do a vote on what would then be a CARES 2 Act, which would mean that this has to get done by next Friday in order for people to look at it over a weekend. They would come and they'd vote in groups of 10 or 12, and there's 435 members of Congress. So I'm really looking forward to kind of the parlor intrigue as to how it actually takes place, as not only what's in the bill, but also how it's going to take place. So let's talk about what could be in there. Speaker Pelosi's CARES 3.0, or her draft of CARES, which was supposed to be the Phase 3, that was floated a couple weeks ago, and I think that is a very partisan document. but that is probably where the base text will start from when you're looking at what the leaders are going to be starting with. There have been some bipartisan discussions. Just heard about a couple on a call a few minutes ago, but it's my understanding that they are few and far between and have not been overly constructive. My guess is this is due to the Republicans not really they're not looking forward to spending more money than they've already spent. There's a couple $1 trillion that have already come out of this. There's real spending fatigue, and I think that there's a lot of people both in the House and the Senate who would like to see that money work its way through the economy first. But the big question is PPP. Phase 3.5 that just got passed last week was driven because PPP ran out of money. The Small Business Administration has already begun approving new PPP loans, but it's unclear how long that money lasts. It might last a few weeks, or there's people who are saying it might run out in the next 72 hours. So my guess, and a lot of people's guess, is the amount of unmet demand that is still lingering when the PPP money runs out will be a key factor into not only when the next bill happens, but what's included. Again, the sooner it runs out, the less there will be in this bill. But let's look at there's probably about 10 things that could be drivers for the negotiation in the next bill. Direct cash payments for American citizens, tax relief with a payroll tax delay, Social Security, kind of the big net programs, the SNAP program, unemployment insurance, again, PPP funds, state and local government aid. The GOP is linking a business liability protection for COVID-19 litigation. So this is really going to be a sticking point, as certainly for Mitch McConnell, as to whether or not there's something to move in the Senate. There's more money for hospitals and testing. There's broadband infrastructure is a big piece for the Democrats. Supply chains focused on China, kind of sector-specific bailouts. And then pension relief. So the ballpark size that everybody's talking about is about another $1.5 trillion. The time frame is late May. And the question is now, maybe does it get done? Probably gets done. It kind of depends on that legislative fatigue over on the Republican side, I think, certainly in the Senate. From MBA's seat, what do we want to see get included in this bill? The service or liquidity associated with the forbearance that was in CARES Act, that's a top tier focus, as will early payment forbearance, remote online notary. We have a bipartisan, bicameral piece of legislation called the Secure Act, which we are trying to shepherd through its early phases here and see if it can get included in any bill that comes out over the next month. Focused on including different asset classes in TALF 2.0, whatever comes out of that, if that gets included in a phase 4. And also a recommendation that Congress expand the rental assistance program among a series of other items. These are all actually included. You probably saw many of these in the calls to action that Alden organized last week. So I think that those are key items. After that, you're going to see the Senate go on to things such as funding the government and starting the appropriations process and looking at what happens with life after COVID. I do think that it's important to note that next week when the Senate is back, there's already a bunch of nominations hearings scheduled. One of them is for Dana Wade, who's Assistant Secretary at HUD. And also there's a special inspector general for pandemic recovery at Treasury. So people are really looking at how to manage this in the long term. I would expect that you're going to see really interesting television with social distancing on C-SPAN. So again, us political nerds are going to be watching that. And we will Alden's shaking her head. When I say political nerd, she said she's shaking her head. That is the alpha political nerd, as Alden knows. So I think that there's a lot of little bits and pieces to this. But I do think that it's going to be very interesting and a longer road. I don't know if I'm conveying it, but I'm a little bit of a seller on the idea that a big bill gets passed. I think you could see another version of a PPP kind of refunding, but everybody seems to be split 50-50 and are throwing their hands up as to how this gets done. If staff comes back, if it's just congressmen in the offices, there's a lot of big questions as to what happens next. I think if there's any questions, I'm happy to answer, or we can keep going, but that's about it for my initial thoughts.
If you have a question, you can type that in and then we'll either answer those during the call or we'll have a follow-up and answer your questions.
Great.
Great. Well, now, William Cooper, you are up.
I'm up. Can you guys hear me okay?
Yeah, I can.
Okay. So thanks very much, everyone. Carly, Simon, appreciate you helping us get this set up, and it's a pleasure to really be with you guys. So fun fact about me, believe it or not, though I grew up in Connecticut, I never really tasted barbecue, well, proper barbecue until I moved to DC. And then everybody in DC said, no, you got to go to Memphis. And it's a fact that I spent a weekend in Memphis with a buddy of mine, eating 3 lunches a day. We split everything and moved from one place to the next, and did the same thing at dinner. And I know the question's going to be which was my favorite. I ate at a little place called Payne's that was a converted gas station, and their pulled pork sandwich was beyond. I hope it's still there. But anyway, that's my fun fact. I also wanted to mention I've got a background here of the cherry blossoms around the tidal basin, and that's intentional. It sort of reminds me of 3 things. One, the sort of annual sense of rebirth and optimism of spring. And I think in these times, it's good to sort of focus on that. Secondly, it reminds me how much we all miss you guys, and we're looking forward to hosting you at our National Advocacy Conference, and the cherry blossoms we've been lucky enough to have bloom around the time that everyone comes to visit us. I call it Advocacy Christmas because it's the family coming home to help us and be together and go up and do the good work we do on Capitol Hill. But it's also a tradition to go and see the cherry blossoms, and the partnership that we have is this growing tradition, this work that we do together. And so, like I say, it was intentional. And it's a photo I took a couple of weeks ago when I ran afoul of the law and went in behind the red tape or the yellow tape to sort of sneak in all by myself to take a picture. But anyway, hope you enjoy it. I'm going to cover, I think, 5 different issues as quickly as I can, but sort of trying to get into some detail to give you a flavor of what we're trying to deal with in this environment. And let me just say at the start of this that in my 20 years at MBA, I've never experienced a time when the sort of volume and pace and scope of the kinds of challenges have been this overwhelming almost. But we're staying in there, and again, the partnership helps us enormously in trying to advocate. So the first one is sort of a quick one. Early on in the crisis, there were a lot of sort of transitions from traditional work environments to home work environments. But if you're a licensed loan officer required to work out of a licensed branch, you needed permission to work from home. To get that permission, we had to go state by state and advocate with regulators. And we were pretty successful in those states that require that employment out of a licensed branch to get some flexibility. In most states, you can just use that guidance to work from home, provided you meet the data and security kinds of things, these virtual private networks and other technology needs that the IT folks know better than me. But in some states, there were some prerequisites on that. You had to either ask for permission and get it from the department, or at least notify the department of who was working and from where. So like I said, we're pretty successful in doing that. And the thing we're paying attention to now is many of those guidance documents were time limited. And so we're coming to the end of April, and some of them, the stopwatch runs out. So they're renewing those. And we're sort of trying to get ahead of that so that folks have some certainty a week, 10 days out to know that they can continue to do that. But the regulators are pretty accommodating on this. In fact, the first of these in Washington, they've already renewed what was supposed to sunset at the end of this month. So, and they've done it in a way that's helpful, where they sort of put the stopwatch into an indefinite kind of, end, where they say until further notice. They don't put another date in it. The second issue relates to essential worker definitions, and there are a couple of different dynamics here. At the early part of the crisis, we had to work pretty hard to expand what is federal guidance on this. So for those of you who don't know this, the Homeland Security Department has an agency, I think it's called CISA, I think it stands for Cyber Security and Infrastructure Agency. And they put out the 15, 20-page document listing literally profession by profession who is essential. And financial services was pretty well covered in the version of the document that existed at the start of the crisis. What we found very quickly is that there were limitations because county court offices didn't have enough specificity in the document. Appraisers, the real estate industry, home builders, particularly their supply chain issues, weren't addressed in the document. And so we worked with our sister trades in DC to lobby, so to speak, the national trade associations of elected officials at the state level. So the National Governors Association, the Conference of Mayors, the counties, the sort of smaller ancillary groups that also represent them, and the Conference of State Legislatures, and basically asked them to use the CISA guidance and expand on it by working with the business community locally to make sure that real estate finance could continue to function in their states. The governors were actually pretty responsive and said, and they're the primary one, but they were pretty responsive in saying immediately, yes, we're using the CISA guidance to get to our governor members. And then CISA revised it and expanded and addressed a lot of those issues that realtors and home builders had, and the appraisal industry, and also addressed those county court offices that we needed some help with. So that was pretty good. Then came the pivot to actually advocating for this. And so, yeah, we have the guidance in good standing, but we needed a call to action. Thank you to everybody who responded to say to their governors, make sure that when you actually issue these shelter-in-place orders, that you define essential workers consistent with that federal guidance. And we even provided state associations and local associations a sample letter that they could use to write more officially on behalf of the whole industry. So pretty good success story. There are a couple of outliers here that I want to mention. Vermont and Pennsylvania. Vermont, less of an issue today, but at one point they actually shut down everything. There was no carve out for even exterior appraisals. And the thinking was a little bit crazy, but it was assumed that in a very rural state with very few appraisers that there would be long travel times to get these things done, and that folks were going to come into contact in the few places that there is density to either get a sandwich or to purchase gas, and that was public health risk. And that's the challenge here, is we're sort of fighting against, fighting for the industry on behalf of everyone. But the argument is we're butting up against public health concerns. Our view was, look, if you can go to the supermarket or get takeout food ordinarily, why shouldn't you be able to do it when you're doing an appraisal? So luckily, Vermont dialed that back. Unfortunately, in Pennsylvania, the Secretary of State has taken a very broad scope and done it in a kind of a screwball way, where they issued guidance that was then retroactive to real estate contracts a month earlier, and said anything after that was affected. We're continuing to work with the Pennsylvania mortgage bankers and the Philly and Pittsburgh groups to advocate that, along with our sister trades, to sort of dial some of that back. There was an announcement yesterday that hopefully when we get a little bit more clarity from the governor's office, will make a change, but we still feel we have to keep the pedal on the floor on this one, because it really is affecting, it's not just the industry, but it's the families who have sold their homes and are living in hotels while they're transitioning and trying to close the next sale. So a lot more to come on that, but we're just waiting for the governor's office to tell us what parts of the state are designated, a little bit more open for commerce. I want to touch on one more issue before I get to the big one, and that's actually two more issues. One quick one. I know that there's a concern around mortgage loan officer fingerprinting and testing. We've been working with the Conference of State Bank Supervisors, which runs the NMLS service through a subsidiary. And the latest that we've heard is fingerprinting centers are starting to reopen, not everywhere. So it's important to check with the vendors to see where you can get some opportunity there. But the challenge is, it seems more now it's on the testing centers, where it sounds like from the document they released and is on our resource page, or you can get it directly from the CSBS on the NMLS page, asserts that they're all going to remain closed through May, but that starting on Friday, they are going to have some limited reopenings. And just to understand how bizarre this is, the list that they link includes nothing in Illinois, but believe it or not, you can get a test in Wuhan, China. Not kidding. That's, I guess, for overseas offshore activities in call centers. But yeah, you can go get your test in Wuhan, not in Illinois anywhere. So we continue to fight on these things. The last two issues sort of represent kind of the bigger challenge. Right now, and I think it's important to just take a step back and understand kind of the political dynamic and the dynamic that's playing out in the press. We represent an industry that is being painted as having caused the financial crisis 10 years ago. We're the big banks who got bailed out. Now, I know that's not accurate, but that's the narrative right now. And it's going to speak to what Alden's going to talk about in terms of getting engaged in the mortgage action alliance and helping change that narrative. But when it comes to policymakers and how they view these forbearance programs, they believe they don't go far enough. And so there's an enormous amount of activity in the states related to how forbearance programs are, well, who the forbearance programs are affecting, and more importantly, who they're not affecting, how the options coming out of forbearance are presented and what those options are, and then what that sort of period of time after forbearance looks like for consumers. I just want to give you a couple of examples around this. The DC City Council passed a coronavirus relief bill here that basically says mandatory 90-day mortgage and rent deferment, and that repaying it must be something subject to an agreement between the servicer or landlord and the tenant or mortgage holder. And if they don't agree, the consumer has the option then of paying back that interrupted fee over the next 5 years, or at the end of the mortgage, whichever comes sooner. So there's very little qualification going into being able to access that deferment, and then all of this is put on the burden of financially is put on the lender in a residential setting for up to 5 years. So we're working very much with the DC, Maryland, and Virginia organizations to try to get the implementing department here to deem compliance with federal law through the CARES Act or FHA or GSE policies to be considered compliance with this provision. But more to come on that. But that's one example. In California, just on the rental side, there's a bill that's going to get considered in a couple of weeks that would actually, with very little, again, hurdle for the renter to prove that they're actually impacted by the virus, allows them, if they haven't paid rent, to get a 25% rent reduction for the out year. So once they've exhausted all federal rights and protections, they can then not pay and get an additional year automatically added to their lease at 25% below what they're currently paying. So that's a pretty significant concern for our multifamily members. But perhaps the most concerning of all of this is the newly engaged group of attorney generals, and particularly the New York Attorney General. So last Thursday, about 35 AGs, bipartisan group, wrote to FHFA and the HUD Secretary asking for very specific changes to existing CARES Act policies on forbearance and moratoria. And while they have no regulatory scope over this, so we don't really know where that's going to go. But what's more concerning is what the New York Attorney General did, which is take that idea and the next day wrote to 35 of the biggest servicers in New York and went even deeper on those prescriptions and said, look, we need you to volunteer to do this because we're not your regulator. But if you don't, and we want your answer in 10 days, if you don't, let us show you the UDAP law. And they sort of waved that around in the letter and said, we're going to prioritize our examinations of firms who don't comply with this. So very troubling. And we hope it's not a sign of things to come, but you know, it definitely is a sign of the kind of environment we're in at the moment. We're working with industry counsel that represent those firms, as well as our own regulatory counsel, to try to engage with the New York AG and try to mitigate some of the worst aspects of that, certainly, but hopefully address many of those concerns by pointing out that a lot of what they're prescribing is either directly conflicting or divergent from existing requirements under the law, these federal mandates under the CARES Act or the GSE policy, or alternatively, if it's a bank, it's the policy, or you're not selling it to the GSE's policy of an investor or a bondholder. So that's one of the two big ones that we're focusing on. And then lastly, remote notarization, which I've spent the last 3 years working on. And luckily, I'm talking to an audience that this is something you put in the rearview mirror in Tennessee. But you know, Dan mentioned we're working on the federal bill. In our shop, we helped draft some of that. But the story started a few years ago with Montana and Virginia, who had laws that were very different. And then Texas kind of created the compromise bill, and in doing so gave remote notarizations the same kind of validity under the law as traditional wet ink notarizations. And at the core of that was establishing certain minimum standards that were acceptable by investors and the title insurers. And Nevada quickly emulated it, and then we got the industry together and asked for direction about what they felt about these two bills. And they gave us two very clear assignments. One was immediately we needed to try to help secretaries of states who don't have the kind of familiarity with you know, the mortgage industry needs, help them with implementation standards for their regulations that they were compelled to do. And so MISMO, the Mortgage Industry Standards Maintenance Organization, convened a working group to help establish exactly kind of the cookbook of how you do ID proofing and credential analysis, and what does tamper evident technology look like, and you know, on and on in terms of the specifics of how those minimum standards must be achieved in regulation. And then the second piece they asked us to do was develop this model law with, and the American Land Title Association came on board with us. And so we took the Texas bill and created a more generic version of it that we then went out to the states with, because we anticipated in 2018 that they were going to be introduced all over the place. And we needed a reference point for how we compared what was introduced to what we ideally would like. And so that set off over 2 years a chain of events that led to about 23 states having these laws. At the beginning of the crisis, we've added a couple. Alaska is about to be signed. New Jersey signed theirs a couple of weeks ago. And Pennsylvania has signed one, but with a temporary timeline on it. So we need to get the full one done. But around the beginning of March, middle of March, I think it was New York that started issuing an executive order. And that's the next chapter here, is we're now in a world where, and I think I've counted 31 of these, different states have issued executive orders implementing what they call ROM, but are not, often not are ROM. And I think the GSEs call it RIN now. It's sort of this remote ink sign notarization. And it doesn't meet the minimum standards, but they're accepting them in some states. And you have to really be careful here, because you got to look at the guidance. And what the technology guys say to me is, just because you can do a notarization using FaceTime and Skype doesn't mean you should do a notarization using FaceTime and Skype. And that's because there are these very specific investor needs, and the title companies have very specific needs about ensuring the security of the transaction. So we're working to get some consistency around these. I think when New York came out, we worked very closely with the GSEs to make sure that they pushed out guidance for what they would and wouldn't accept. There's now been 2 rounds of guidance that are the result of MBA advocacy. The MISMO folks have stood up some really good information on their site MISMO.org, and it speaks to not just the list of all of these executive orders and what they say and how long they're in effect for, but then they list the vendors that are familiar with real estate transactions and the needs of our industry, and encourage you to consider those. Not that they're endorsing them, but just so you have a roadmap of who you can work with. So stay tuned, a lot more to come on this. And as Dan said, we're continuing to work to try to get a federal bill done. And we're optimistic that when it gets done, would help motivate individual states. But in Tennessee, you guys are just terrific. You took our model a couple of years ago, got it implemented, and your Secretary of State even used a lot of the MISMO language to implement your regs. So you're in a good place in Tennessee. So let me stop there and see if there are questions, but that hopefully gives you a flavor of where we are. I'm going to just hit the button here. No open questions.
Great, thank you, Coop. And so I'll start talking about Ma here in a second. I'm trying to think of my fun fact. Dan told you that I was a political nerd, which is true. I actually, in my spare time, which these days is harder to define, maintain a spreadsheet that tracks all U.S. House, all U.S. Senate, and all governor's races. And of course, in a presidential year, when the Democrats had 90 million candidates, I was also tracking all of that activity. And the spreadsheet includes information about their opponents, information about the district, information about how many people voted in each party last time, and in 2016. So 2018, 2016 data, and it's color coded: red for Republicans, blue for Democrats, and purple for independents. So yeah, huge nerd when we're talking about, I guess the alpha nerd comment holds true. And Carly mentioned that I did play basketball at Sewanee in Tennessee. So I am a former Tennessee resident, and still have a lot of friends in the and family actually now in the Nashville area. So I've loved being able to partner with the Tennessee mortgage bankers, the Nashville mortgage bankers, the Memphis mortgage bankers, and the Knoxville mortgage bankers on some of these road shows that we've been able to do from the national perspective. And I'm thrilled to be able to continue this virtually right now in this new world that we're living in. I am going to switch the slide now to talk about Ma. So a lot of you, if you've logged into a webinar, or if you were able to participate in some of the road shows, you've heard us make the rah-rah pitch about Ma, but I can't think of a more important kind of time in my tenure at MBA for the Mortgage Action Alliance. And I noticed when Carly was reading out my bio, I actually need to update my bio, where we've actually seen a phenomenal growth even in the last just 5 weeks. Right now, we're actually over 32,000 members nationwide. And that's been due to, gosh, about a 30% jump just in the last 5 weeks. From we were hovering over about 20, we had lapsed a little bit, and we've now gone up to 32,000. And I'll be talking about a campaign that we're running next week called Action Week in a minute. But essentially, for those who are unfamiliar, Ma is our grassroots advocacy network affiliated with MBA, but it's not limited to people who are employees of MBA member companies. So anybody who works in real estate finance is actually eligible to join. And it's the best part is that it's free. You do have to renew your membership annually. It is an annual membership, but anytime you open an email from Ma, anytime you complete a call to action, which I'll explain in a minute, and anytime you register for an MBA conference, all of those activities generate an automatic renewal. So we do try to make that as easy as possible. And we use it in a variety of ways. I like to say that we use it for two purposes. One is to keep our members informed. We send out, and you can see a lot of this on your screen, we send out a biweekly newsletter electronically, and we have two versions, one that goes to our commercial multifamily members, and one that goes to our residential single family members. So we really do try to tailor the content to our relevant market segments in that way. And that used to be weekly, but we really wanted to reduce the volume of incoming communications. And now in this kind of new world that we're living in, we've actually increased the number of communications with some breaking news alerts. So for example, our CEO, Bob Brooksmith, put out a press statement in response to some of Dr. Calabria's comments recently. We pushed that out via MA, both in our email newsletter and also in our app, which I'll also talk about. So we're really trying to keep those updates current and relevant, and those newsletters in general, and the weekly one, the biweekly one usually goes out on Wednesdays. We had a slight delay, so it went out this morning. So those of you who are MA members should have gotten that this morning. But that includes legislative updates from Washington, D.C., what we're watching up here, legislative and regulatory updates from the states and certain activities. A lot of what Coop just covered would be covered in there, and regulatory activity, obviously, up in D.C., and then links to webinars. We've got a lot of content right now that we're pushing out via MBA webinars related to technology in COVID-19, related to policy changes that we're watching. So a lot of content, and of course we are still in election year, which is hard to fathom right now. But that also includes election updates and kind of political content as well. So we really do try to have a comprehensive offering there in that newsletter. And then the other informational item that we offer are educational webinars with our legislative and policy teams. We generally do those on a quarterly basis. I do imagine, given the current environment, that we'll probably move that to monthly. We hosted one recently on April 15th for mom members. And again, that's free for all mom members. So it's, again, this is kind of an exception. MBA webinars typically are only open to member company employees, but the MA webinars are free for non-MBA members who are members of MA. So it's kind of a nice benefit for folks who are not member company employees. If you are a MA member, you do at least get some of this content for free by virtue of you being one of our advocates. And those webinars are about an hour. And again, they cover a lot of the stuff that you've heard today. We typically have another policy team member to talk through some of the regulatory items. And then we usually end with a focus on MA from a high level with stats and kind of a review of our calls to action and things like that. So really, really great informational content. And really our goal there is to keep folks informed, because an informed network is more likely to understand how some of these regulatory and legislative developments can impact both their businesses, your borrowers, your communities, and right now, obviously, the broader economy, and that can make maybe you more willing to contact your elected officials when an issue does arise. That again speaks to some of the information that we're pushing out, and that kind of leads me to the call to action function, which is the other item here, and the other primary purpose for the Mortgage Action Alliance. And so what happens when we send out a call to action is we send out an email, and we'll do a push notification in our app that has a brief blurb about the issue. So it's more likely than not going to be legislative. We have done some regulatory calls to action in the past, but anybody who's been to regulations.gov and seen their kind of framework and platform for submitting public comments, it's very clunky, which makes the call to action kind of clunky. So we have traditionally in the last couple of years kind of avoided regulatory driven calls to action. So generally speaking, the issue is going to be a federal issue that's before Congress, or a state or local issue that's before your governor or the state legislature. So we have our platform can help you communicate directly with those officials, really by matching you with your zip code to your elected official. So it's very intuitive. And what happens is we send out the email. It has a blurb about the issue, what the impact would be, and then it links to a form, which I'll show you on this. And this is kind of our action center. Any of our live calls to action, by the way, on the federal side are going to be posted to our main advocacy website, which you see the URL up there. It's action.nba.org. And that's kind of a little screenshot of what the website looks like. And you'll be taken to a form, and the form will ask you for a little bit of information, and that's, again, just to link you to the right elected official. And then the next page takes you to the actual message, and the message has been drafted by a combination of folks at the NBA, including our legislative and policy teams. And it then you can you have the option to edit that message, so you can add information about how many jobs your company provides, or how many people your company employs in the district or in the state, or how many people you helped get into homes or refied, or you can kind of add some of those stats if you would like. Some people also like to add a professional anecdote that better illustrates the issue that we're communicating with that elected official about. So those types of kind of real world examples and data are always very helpful. But the pre-drafted message is also kind of good to send as is. And in some cases, you might disagree with the NBA position, and that's fine. We actually encourage you to continue sending that call to action, and then you can just delete the entire message and write out how you feel about it. So we just really promote you getting involved and getting engaged, because by sending out that call to action, you have established yourself as a resource in that particular district. And that's important because not only are you a constituent in an election year, especially a voter, you are a practitioner that can be helpful. I hate to say dumbing down, but demystifying and explaining some of the more complex and technical aspects of the mortgage market that maybe that staffer or that member of Congress or state legislator doesn't have that similar background. So it's you all play a very important role of not only telling your story and kind of highlighting all the great work that you guys are doing in your communities for the borrowers, for the consumers, and for their borrowers and consumers in their districts, because those are constituents as well. We also play a really strong role in educating these folks about how these issues, whether it's legislation or regulations, really impact both your business, but also the end user, the end consumer, and the community, because there's a lot of things that happen in Washington really at a rapid pace, or in state capitals where they write a piece of legislation in a way that maybe they haven't thought it with the 360-degree view there on how that would actually be implemented, or what the actual impact would be on actual people once that pen has gone to paper and signed it and made it official law. So you all really do play a really important role. Anyone who has been to our advocacy conference kind of probably understands that. But you all are the experts, and that's a really important role to play as we work with our elected officials on legislation that impacts us all. And so you'll see on your screen some of these calls to action. Dan and Coop both mentioned several of these. These are all live, so you can go to action.nba.org right now. You actually don't even have to be a member of MA to take action. There's actually a function in the platform that allows you to join or renew your membership right before you click send. And so these are all of the live calls to action we have going on right now. And again, those top two are the federal ones that we're still pushing for inclusion in that phase 4 relief package that Dan mentioned earlier, both on the remote online notarization nationwide, which again, as Coop mentioned, you guys are kind of set there, but it's still good to get bipartisan co-sponsors. And I know in Tennessee, there's a couple of your legislators that are already on as co-sponsors, including Steve Cohen. But the other one, the one that we're really pushing right now, is this phase 4 call to action, because it includes a lot of the priorities that you've seen in recent weeks if you get NBA communications about the establishment of a liquidity facility, we're continuing to put pressure on Congress, to put pressure on the Fed and Treasury. And right now, just on that call to action alone, we've sent collectively 20,000 communications to every single U.S. senator. And right now, I think we're about 410 or 411 House members have been contacted on that issue. So that's important because politicians pay attention to efforts undertaken by a large group of people. That kind of the numbers are what will raise eyebrows and make them pay attention to an issue. So would encourage you, if you haven't taken action on any of these, definitely please consider doing so, because the more we can flood the inboxes, the more they we can maybe start seeing some positive forward progress there. And we are hosting, I guess I just put it to the question screen. I couldn't remember what the next slide was. We are hosting a national campaign next week aimed at growing the Mortgage Action Alliance and also activating the current MA members as well. And it's called Action Week. And it starts May 4th, Star Wars Day. May the 4th be with you. Also a nerd, a regular nerd. And we're asking companies to run enrollment campaigns. And I know we're working with Carly to do one statewide in Tennessee, which we really appreciate. But the goal next week is to grow beyond that 32,000 number that I cited earlier and to grow to at least 35,000 nationwide. We represent about 250,000 employees in the real estate finance industry. So, you know, we'd love all 250,000 to be members of MA, obviously, but really trying to kind of break through that 10 to 15% that are currently enrolled and get that number up, because as we like to say, the larger the group, the louder the voice. And so I'll stop there. And it looks like we do have some questions that have come in the chat box. So yeah.
Can I chime in?
Yeah.
Oh, okay. So I think David asked a couple of questions here. The first, it relates to Ron and non-agency investors. Yeah, that's especially with these executive orders, that's a problem. There is some chain of custody issue that the lawyers are raising. It's higher risk. That's why we push so hard to get the GSEs to issue very specific guidance about what they will and won't accept. I am unfortunately not the guy who has the portfolio of working on secondary market issues, so I'll have to take that back and get sort of an update for you. And then on the FHA announcement, the question, you know, it's on this issue is on the list. I don't, again, I'm not the FHFA expert. I don't know who on this particular question about the cash outs. So we'll have to circle back on that as well, David. I'm sorry.
Well, this is Dan. Just real quick, I thought the cash outs were, again, this is one of our colleagues is more focused on this, but I believe cash outs had those big, right? So I'm reading your question. They have now implemented massive LLPA adjustments, right? So there's 5% and 7% LLPA, which is a huge haircut, we understand, on cash outs for first-time home buyers and then anybody else. That was, there was kind of three legs to that stool on what we were talking about with FHFA, and there's been constant conversations from the top of our organization, from Bob Brooksmith to Dr. Calabria and to Dolfo Marzol, people who are running FHFA. The cash outs were one of the parts that kind of was not addressed in the way we wanted them to be on an initial basis. We'd like to put some numbers behind the universe of cash outs that are going to be affected in the COVID era. So I think we are working to get data on that in order to push back effectively. That is something that is absolutely on the top of the list. Conversations are ongoing with them, but I don't know if they have taken this. I would say at least the April timeframe as something that needs all of their support. They've given a lot of support from the FHFA, but we definitely want them to do more, and we're constantly pushing on that. But we will also get back to you on the details of the conversations that we've had or that we will be having over the next couple days.
All right. Well, I don't see any other questions. I just want to say thank you again, Alden, William, and Dan, for joining us today and taking time out of your day to educate us. And hopefully everybody got something out of that. And we appreciate your time and hope everybody has a great day.
Thanks so
Thank
much.
you. Stay safe, everybody.
Thank you.